Hi, this is June from Turning Point Life Investment, and this is your weekend market analysis for the week ending in October 31st, 2009. So last week I mentioned that the market was in correction mode, and this week it still holds true. I mentioned that if the 20-day moving average gets broken, then most likely this 50-day moving average will get retested. It did so for a day or two, and unfortunately on Friday, it managed to break under and close under the 50-day moving average. So you can tell that the selling pressure is pretty strong. Recently, we've been getting some pretty violent moves, a lot of downside, a lot of upside moves. So that's usually an indication of selling pressure. A lot of violent moves ups and down. On Friday, we closed with a very high volume spike. So again, showing you that the selling pressure is definitely there. You can also tell the mood is changed, where usually when the buying comes in, there's follow through, right? Every time the market pulls back to some kind of support, such as here, here, and here, there's continuous buying. But we only had that for one day, and unfortunately, that got completely erased the following day. So the sentiment has changed. Buyers are no longer strong enough to continue the buying. Instead, it's a reason for people to go short. So anytime the market rallies, it's a way for short sellers to come in and short the market. So the sentiment is changed, right? Buying the dips is no longer working as of right now. Okay, I'm going to take it back out to a 9-month view. Now, what's critical about this Friday's move is that this trend line is broken. So as you can see here, the trend line is broken. A lot of support is broken. The 50-day moving average is broken. So again, I wouldn't be surprised if we move a little bit lower, probably to retest this low back in the beginning of October, around 102. There is a very good chance that we might get a bounce to retest this trend line. Okay, so I'll be looking for that. If that is true, and if this holds as resistance, then more than likely we'll probably get some more selling pressure. And if that is the case, I'll probably look to short or go bearish on the market right around this trend line, the retest of that trend line. But for now, all we have to do is just watch for the support and resistance level. I could probably assume there might be a little more selling to come. Again, probably trying to retest this 102. And if there is a bounce, watch for resistance level. Going into the hourly view, you can see 107. It was the previous resistance. So I would look for that again if there's any type of bounce. Anything higher, I would say probably 108. But in this area, look to see how the buyers and sellers kind of interact. If the buyers start to peter out around this area, then more than likely that will probably be a safe time to go short again, especially looking on the daily view where that trend line intersects. So that's something that I would look for, somewhere around the 107-ish area. Okay, next we go into the VIX, looking at the sentiment. You probably don't need the VIX to tell you that the market has been pretty volatile lately. We actually cleared above this resistance. A very huge day on Friday for the VIX. Clearly almost 24% jump on the VIX on the volatility. So fear is coming back into the market. What I would want to look for is for this VIX to kind of stabilize around this area right here, right around the 30-ish area. It might even pull back underneath to below 30, but maybe try to retest around the 28 area. If that is the case, then that further proves the bearishness of the market. If the VIX drops just a bit, just to kind of relieve the amount of fear, and it jumps back higher, then that tells me the correction or this decline will continue. So that's something that I would want to look for. Or if the VIX decides to stay, just kind of meander along the 30, that's also another bearish sign telling us that the fear is still inherent within the market. So overall, we said before, continue buying the dips until it's proven wrong. Well, right now it's proven wrong to buy the dips. It seems like the rallies are being sold. At least on Thursday it was. So, whether this is the top, quote unquote, and we're going to start heading lower from there, only time will tell. But what this last week and this week is telling me is that the sellers are starting to come back in with strength and with backup. So if you're a buyer, I would definitely either start hedging your longs or stop going long and basically stay in cash. Or if you like to short the market, wait for any type of bounce, any type of rallies to be a shorting opportunity for you.